You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Well, hello, everyone. Welcome back to the podcast. I hope that you all are enjoying your summer. Finally got into the 90s here in Seattle, Washington, and we are all hot. And I'm really happy that we had air conditioning installed a little over a year ago. Took about a year to get it installed since everybody suddenly wanted it in our city, and there wasn't enough workers to go around. So we're excited we have it now, and we used our banking system to purchase the air conditioning, or the air conditioning unit, that is. So today I thought I would elaborate on the process of managing your loans. I did cover a lot of this information a little over a year ago in a podcast. I just thought it would be good to have a refresher. And also, I've been having this conversation a lot lately with different people and different clients. And there have been another way that I have been suggesting people can pay their loans back, or even policy premiums, the paid-up additions rider anyway. And so I thought I would share that and just elaborate and just refresh your memory on some of the ways to pay yourself back. So the main way and the most obvious way would be simply to have another automatic draft set up from your bank account. It can be set up from your checking account or your savings account. And we just have that set up direct with the company, so they just draft it on whatever day you choose. So let's say you take a loan out, it's July 1st, you take a loan out, and then you decide, well, here's what I want to pay myself back, or we have a conversation and we create a plan for that. And then you can decide what day you would like that loan repayment to begin. So maybe you'd like it to begin August 1st, or maybe August 15th, or maybe in September. So that's just one of the awesome reasons, again, to be borrowing against yourself, because then you can select your draft date, and you can also change that draft date and change the amounts you want to draft. But yeah, anyway, you can have it drafted directly from your account, and it's just clean cut, simple. We just have that happen every month, and you're paying yourself back. Of course, if you are paying yourself in the way that Nelson Nash suggests you pay yourself, which is more than what the company is charging you in interest, you're going to want to do that differently instead of having it only draft from your account, so that you can account for that extra interest that you want to pay yourself to be an honest, good banker. So in order to be able to pay yourself back at a higher interest rate than what the insurance company is charging you, you would want to set up a separate bank account, call it something different, so you can easily know that that account corresponds to your life insurance account, that that's why you opened it, so that you can keep the accounting clear, what's going in and out of that account. You can set up a separate bank account that you have your loan requests. When you receive funds from the insurance company, can go directly into that account, or your regular bank account, whichever. But to keep the accounting really crystal clear, you can have that money go into your new separate bank account. And then when you pay yourself back, we will decide what you're repaying yourself back, what interest rate you'd like to charge yourself, how many years you'd like to pay that back, or what payment you can afford. And we figure all that out. And then you start paying that payment to your separate bank account, so that your bank account can absorb and take in all the cash that you want to send to it. So of course, you just send those payments to your bank account, and then those payments from there, they can be drafted. Like I mentioned in example 1, they can be drafted from your bank account to the insurance company. So you could set up a date where you are funding this separate bank account, and then another date where you are having it drafted to the insurance company. And so then that money goes from one place to the next, and that it does go back to the insurance company, so that you're paying down that loan in a timely fashion, and you're paying less and less interest to the insurance company because your loan is shrinking every month. And then once that loan gets paid back to the insurance company and it's all paid off, at whatever the interest rate is with that insurance company. Current rates with my primary companies are 4%. And so you would be able to pay that back at 4%, but maybe you charged yourself 8% to borrow the money so that you would grow your banking system in a more efficient and better way. So if you're charging yourself 8%, what's going to happen is you're going to end up paying back that loan to the company more quickly if you charge yourself and you have a higher payment at 8%. And so those extra funds will be able to be held inside of your separate bank account. So you'll be able to continue funding or paying yourself back for the amount of time that you decided to. And those extra funds will accumulate and build up inside of your separate bank account. And then once those funds have been built up inside of there, then you have an option. You have options of what you would like to do with those funds. Would you like to pay back a different loan on a different account, or put them towards paid up additions inside of your current life insurance account? Or maybe you want to begin a new life insurance account, or maybe you want on another family member, a child, a wife, a spouse, a husband. And so then you have the option, because you have the funds accumulating in your separate account, to move those funds into a policy in a different way. And remember that funding policy premium is what is going to grow your banking system over time. So if you're able to use those extra funds and put them into the paid up additions rider on your current policy, a new policy, or someone else in your family's policy, that's going to grow your overall banking system. And the new piece of information that I wanted to add to this scenario is that when you are funding your separate account, or even if you're just using your regular bank account, you can, instead of having that automatic draft set up, you can also use your bank's bill pay system, which is very convenient as well. So you would go into your bank's bill pay, you would put in the information that's required, your life insurance account number and the address and all that stuff. And then you can set an automatic bill pay from your bank to go to your life insurance policy. So then you are in control of when that payment goes out. You can set a date that you want it to go out regularly, or you can go in and change that date, or just pay when you want to. Just another way to have more control over paying your loan back. In choosing to go about it this way, you may decide you don't want to pay back your loan repayment every single month to the insurance company. So you may be accounting for it by putting the funds into that account each month from your regular, your more used, your checking account that has most of your funds. And now you're funding your separate bank account to account for the most recent loan you took out, or whatever amount of loans you took out. You are sending that money from one place to the next. And from there, you can choose to send it back by bill pay instead of setting up an automatic draft. You can just decide, maybe I'm going to send in some money quarterly or semi-annually or annually, or simply whenever I want. You can choose how often and what amount and when you send money to the insurance company as your loan repayment, as just another option. So that gives you more freedom, because you can be totally in control of that rather than having that automatic draft. Although still, I do like the automatic draft, because you can set it and forget it. And then that money will go back to the insurance company every single month, lowering that internal loan on your life policy. And you can also use this bill pay option for sending in paid up additions. So let's say that you set up an account, or maybe you are paying just the base premium only, either on a brand new account, or maybe the annual premium came due and you said, hey, I just want to pay the base premium only for now on a monthly basis, and I'm going to send my paid up additions in differently. And so you then will have the opportunity to send in those paid up additions using your bank's bill pay system whenever you want throughout the year, in whatever amount of chunks that you want, or on a regular basis, quarterly, semi-annually. But you can be in control of that. We would just have to notate on your bill pay where those funds are going. But I do want you to keep in mind that if you were to do this, that when you send something through your bank's bill pay, they are basically mailing a check to the insurance company. So it's not going to be like a super automatic and super fast process. It takes a minute for the funds to go from one place to the next, because they are writing a check and sending it. I mean, sometimes the funds can go electronically, sometimes they're mailing it. So it just depends, but keep in mind that it may not go super fast and that you just want to allocate and allow for some time for those funds to be transferred instead, because sometimes I have people looking up their account right away and they're like, oh my gosh, where are the funds? I send them through my bill pay. It's not there yet. So just give it a moment and let them transfer the way that they need to transfer. And it's always worked out just fine. Just another option for you. And when you're going through this process of borrowing funds and paying yourself back, and you're trying to figure out how much do I pay myself back, if you do want to set up more of a strict repayment schedule for yourself, my team and I can help you figure that out. We do have amortization schedules we can prepare for you if you'd like to give us 2 or 3 variables, how much you want to pay or how much time you want to take to pay off this debt, the interest rate you want to charge yourself. So just a few of these variables, 2 out of 3, we can put together an amortization schedule for you. And then you will have an exact plan and it will show you exactly how much interest you will have paid yourself and all of that. So we can do that all very exact if that's something that you want to keep track for your records. In addition, if you are a business owner and you have business cost or business loans that you want to take over with your new banking system, we can certainly do that. And you can have the business take a loan from you, and we can create the amortization schedules for that so that the business can pay back that figured out set amount to you. And then we can even draft promissory notes for you for your CPA so that they have the information they need when preparing your taxes. As I said earlier, really one of the coolest things about this whole system is that you are in full control of repaying yourself. So you are able to change, lower, or increase the amount that you're repaying yourself. You can pay off a lump sum. There are no penalties. You can skip a few months or a year. If there's a hardship, you can simply stop loan repayments altogether until you're out of that hardship. Of course, I would always say that it would be best to treat yourself like an honest banker and pay yourself back with interest and pay yourself just as you would any bank loan or credit card payment where you have to pay yourself back so that you get the most out of it and you have the most growth and the most benefit. But of course, you don't have to. And that's one of the most freeing things about the system because you have full control when you have to make a change to something. You are certainly able to. And of course, just to say again, if you were in a hardship and you needed your policy to pay the premium, you could certainly have it drafted internally to pay the premium. Even you could have it cover the base and the paid up additions if you wanted it to, or maybe just the base because you have a full year to fund the paid up additions part of the premium. And maybe that would be enough time for you to be able to fund those funds. And so you just have that option if you do have a hardship. I find it's been helpful to a lot of people. And we have used it before for different people who just couldn't fund the premium as expected. They thought they would have a certain amount. They thought they would have a bonus. They thought they would have something coming in, and it didn't happen. And we were able to use this feature to be able to help them through that hard time. And then they got right back on track, and everything was good to go from there. And I know I've mentioned before that pulling a loan to pay the premium is perfectly well and good when needed, but certainly not something you want to do all the time. And you don't want to be pulling loans all the time and not ever paying them back at all. Over time, that's going to be not very good for you. And you're going to wonder, where's all the funds that I had in my account? I wanted to use this for some big purchase or retirement. And if you just keep depleting it and never replenishing it, it's not going to be super awesome. And you're going to wonder what happened. Well, that's all I have for you today. I hope that you have been having a great summer, as I mentioned before, and that you have a great upcoming week. If you'd like my help, if you'd like to partner, please reach out to me at Valerie@alphaomegawealth.com. Thank you so much. Thank you for listening. Until next time, take care.
This is thepodcastfactory.com.